discussing about that topic manual accounting cycle and computer accounting cycle. So first of all, meaning of accounting cycle. So accounting cycle means accounting cycle is a process of step by step recording and summarizing and classification and business events is called the accounting cycle. So again, accounting cycle means accounting cycle is the process of step by step recording and summarizing, and next one step is the involved of the business events is called the accounting cycle. And otherwise accounting cycle means accounting cycle is a business transactions and beginning with to the ending transactions is called the accounting cycle. Next, manual accounting cycle means. So manual accounting cycle means is the first of all identify of transactions, and it is also summarized data is events is called the manual accounts. So manual accounts means manual accounts is the step process of identify before with beginning starts and transactions. So transactions means transactions is a events. Transactions are the events. So events means business events. So business means business is a being busy, and business is a production of, distribution of, exchange of goods and services is called the business. And the economic consideration is called the manual accounting cycle. So manual accounting cycle again means is the starts of the identified and transactions and summarized the data. Transactions means is the business events. So business means business is a being busy, and business is the production of, exchange of and goods and services is called the business. So business also called economic activity also. Business also called economic activity, and business is the economic consideration is called the manual accounting cycle. So manual accounting cycle is a step process. So steps process involve the process. First process, step 1, transactions. Step process, transactions. And second step, journal entries. And third step, ledgers. And fourth step, trial balance. Next, fifth step, profit and loss account. The shortcut is the P by L, profit and loss account. And final step, last step, B by S. So B by S means balance sheet. So this is the steps process of the manual accounting. So step process, the first one is the step transactions. So transactions means transaction is a business event. Transaction is a business event and is economic is a economic consideration. Economic consideration is called the transactions. So transactions means, and again the transactions are business event, and is the economic consideration is called the transactions. Transaction is the step by step involved the exchange data. So exchange data means the transfer of economic data or economic consideration is called first step 1 transaction. And next further step, so further second step, so second step journal entries. So first of all journal. So journal is a day book. Journal is a day book, and journal is a single book. Journal is a proper book. Journal is a proper book and day book. So journal is a day to day of transactions, and recorded is the first book is called journal. And journal entries means the book of record of entries. Chronological order is the entries of record is called the journal entries. The journal entries format, the journal entries model, there are the model of number of 5 columns, journal columns. So first one column is the date, and second one column is particulars, and third one column is the LF number. So LF means ledger folio number, and fourth one column is debit rupees, and fifth one column is credit rupees. So this is the 5 columns. So this is the 5 columns is the journal entries columns. Journal format columns is the 5 rows, 5 columns. So 5 columns is the first date, second one particulars, third one ledger folio number, and fourth one debit rupees, and fifth one credit rupees is the second step involved. And next one, third one step is a ledger. So ledger is a principal. Ledger is a principal book. Ledger is a principal book, and it is a computer file. It is a computer file is called the ledger. Journal entries, journals recorded after book is called ledger book. So ledger book is called principal book. Ledger book is a computer file. So ledger columns are, there are columns, 8 columns. So first one column date, second one column particulars, third one column journal folio number, fourth one column debit amount rupees, as well as credit side also 4 columns, date also, second one particulars also, third one journal folio also, and fifth one credit amount rupees. There are the total 8 columns, ledger format, ledger model. Then next another one, the step of involved the fourth step. The fourth step, trial balance. So trial balance means, every debit equal to every credit equal amount is called the trial balance. And also trial balance is a statement. Trial balance is a statement, and on credit and debit, credit and debit is the credit and debit is the double entry system, accounting system process is called the trial balance. So trial balance is the equal to the debit and equal to the credit amount column is called the trial balance, and trial balance is a statement. This trial balance is a statement, not only book, only statement is the trial balance. Trial balance is the identified, is the founding. Trial balance is the mathematical, arithmetical accuracy is the find out is the trial balance. Next one, further step, next step, profit and loss account. So profit and loss account means, so profit and loss account is a nominal account. It will be recorded, profit and loss account will be recorded to the debit side. All expenses, all losses is the recorded. And as well as credit side profit and loss account recorded of transaction, business event transactions, incomes and gains is called the profit and loss account. The profit and loss account statement further finally net profit or net loss find out. The next finally BS means the balance sheet. So finally lastly the steps of process of manual accounting business, the statement of balance sheet. Balance sheet is a one-day statement. Balance sheet is a one-day statement is prepared by the companies. All the right hand side is the liabilities, all the left hand side is the assets is recorded called the balance sheet. The balance sheet is prepared that finally the company, the form of business financial position or good or bad is called the balance sheet. So this is the manual accounting of step of process. So transaction to journal entries, journal entries to ledger, ledgers to trial balance to balance sheet. So in this cycle, beginning with the transaction to ending with the transaction, business event transaction is called the manual accounting step process. This is the first one, manual accounting cycle. And another one, computer accounting cycle. So computer accounting cycle. So computer accounting cycle means, so first one, transactions are recorded. Second one, classifying. Third one, summarizing. And fourth one, business interpretation to the business event to the accounting software is called the computer accounting cycle. So computer accounting cycle means, so first recorded, second one classification and summarizing and analyzing interpretation to data, the business event data to software is called the computer accounting cycle. So computerized accounting cycle or computer accounting cycle majorly involved to the three steps. So three steps. First one step. So first one step, company creation. First one step, company creation, and second one step, ledger creation step, and finally voucher creation. So in this involved to the three steps is the computer accounting cycle. So this is the manual accounting cycle and computer accounting cycle. So today that's enough of topic. Tomorrow will be next topic.